high-end suburb. You even got the college over there, right? So it's like an unlimited supply of tenants for you. You're in a place like Birmingham, which is like the tech sector of the Southeast, man.
Our big value add, in addition to helping you build a strategy around investing to do things like maximizing tax benefits, is we are able to pass these wholesale type of pricings from these big builders like D.R. Horton, Toll Brothers, LGI, Lennar, that you would not have access to on your own because you're buying with our community.
What Rent-to-Retirement's able to do is they're able to put you into these properties, right, with no money down. Welcome to the Investment Properties for Sale Show, folks. Thing is selling at or above list. We are going to provide you guys with complete transparency and education. We take you to the video tour of HoltonWiseTV, giving it to you straight. Today we're going to talk about creative financing. We're going to be utilizing a lot of creative financing to do some very impressive, albeit semi-complicated deals in the Birmingham, Alabama market, okay? The property that I have for you guys today, okay, this is the Sweetgum model, okay, and this comes in a Birmingham suburb called Montevallo, okay, Montevallo, Alabama. It's a little college town. There's like 3, 4, 5,000 kids out there going to college. That's what's going on in this little suburb. But like essentially, I don't want you to focus too much specifically on Montevallo. We're more interested in the Birmingham market as a whole, okay? My friends, my partners over at Rent-to-Retirement, they do a ton of new construction in the best markets, growth markets in the USA, right? They're doing a lot of stuff down in the Southeast, a lot of stuff in the Birmingham market. They're also in Florida, other markets, etc., okay? This particular community they're building up, you can get these little 3-2s for $282,900. They're going to rent for $1,750 a month. Everything's new, high-end suburb. You even got the college over there, right? So it's like an unlimited supply of tenants for you. You're in a place like Birmingham, which is like the tech sector of the Southeast, man. It's like San Francisco, except for homeless people don't take a dump on the sidewalk, right? It's like that, okay? So these are like good, solid markets, right? And what we're able to do, what Rent-to-Retirement's able to do, is they're able to put you into these properties, right, with no money down, okay? So you get an A-grade investment, brand new investment, high-end tenants. You're in a growth market, okay? Again, think about it like it's Silicon Valley without all the homeless poop, okay? It's like that, right? You're in a nice area like Birmingham or potentially others, and you're able to buy these things with no money down. 30-year loans, no money down. Now, at this point, I would expect that if you're somebody who's been watching a lot of content online, trying to learn about the real estate industry, I would expect your spidey senses are kind of going off a little bit. You're probably like, wait, what? This seems a little odd to me, James. How can I get a brand new house through this company, Rent-to-Retirement, where they put it all together for me? They do it all. They build my friggin' house. They give me a tenant. They give me property management, et cetera, and they're giving me a loan, and I don't have to put any of my money into the deal, dude. Like, I don't have no skin in the game in this deal. That's pretty weird, James. I feel like this might be a little bit too good to be true, James. My spidey senses is tingling, James. Am I about to get ripped off? I hope you're asking all those questions, guys, because if you were not asking all those questions, you haven't been paying attention to the things that I've been teaching you, and you haven't been paying attention to the things that are happening out there. There is so many like gurus and scams and education platforms where they're touting no money down this, no money down that, get started this, get started that. And most of it is just like a sales funnel to rip you off, sell you like a big seminar, et cetera, right? A lot of it is total BS. Now, that is not the case here. These are legitimate assets, and we are legitimately putting you in with bank financing, no money down. Now, the whole thing, it's tricky and it's creative, and there's a lot of things happening like at a higher level, right? Like you just randomly yourself off the street just can't come in there and like put this deal together, right? You have to kind of ride the coattails of the economies of scale that Rent to Retirement is putting up, right? They're buying hundreds and hundreds and hundreds and hundreds of these houses from like big national builders and stuff, right? And like you're able to like piggyback off of that. As a matter of fact, what I'm going to do now, because he'll be able to explain it even better than I could, right? I want you guys to pay attention. You know, sit down, tell the kids to shut the fuck up for like 10 minutes because we got some learning to do, right? This is probably the most important part of this particular show because you really need to pay attention to exactly how this all works because like, you know, if you essentially take what you're learning here and your only takeaway is, oh, dude, you could get new construction homes with no money down, and then like you go elsewhere, you might like find yourself like roped into some weird trap. So even if you don't buy this property from Rent to Retirement or anything, I really want you guys to pay attention to all the moving pieces that are going to need to transpire to put these types of deals together with this nice package for you. So what I'm going to do is I have Zach. He was doing a webinar explaining this, and he explained it perfectly. It's very detailed, so I'm just going to shoot you guys that footage right now. I want you guys to watch Zach. He's the CEO of Rent to Retirement. He's going to explain exactly how they put the steps together to actually produce for you guys a new construction home coupled with investor financing at no money down.
I think it's really important that everyone take out pen and paper right now because we don't have slides going through the math, but I'm just going to run through the math with you on this stuff, okay? And I'm going to use simple math and keep it generally broad, but this is a combination of builder incentives and using unique loan structures. Let me set the foundation of like why we're able to access these type of deals and how our company works. So as Naresh said, Rent to Retirement, you know, we form relationships all across the country in markets that we see opportunity in to bring you the best opportunity regardless of your experience level and your geographic location. So anyone can invest in the best markets to be the most successful investor with all the teams set up in place. Our company really functions two ways. One, we do a lot of in-house new construction that we are personally building. But the majority of what we do, and Chris, I saw you on there. I still got some Cape Coral going there, buddy. So we'll get through it. But our company operates two ways, right? So we build our own stuff, but that's a small minority of what we do. The majority of what we do is actually forming relationships with regional and national builders throughout the country and going to them and negotiating wholesale type of pricing, because as a community, we are purchasing hundreds and thousands of homes across the country. And so we are able to go to some of these national and regional builders and say, you know, we're going to come in like an institution, like a BlackRock, and we're going to buy multiple houses, and we have to commit to that up front. And then we are able to, because of the buying power and the volume, have below market value pricing, wholesale pricing that we pass on to the individual investor. And we still put all the teams with management, lending, insurance, all the things in place. But our big value add, in addition to helping you build a strategy around investing to do things like maximizing tax benefits, is we are able to pass these wholesale type of pricings from these big builders like D.R. Horton, Toll Brothers, LGI, Lennar, that you would not have access to on your own because you're buying with our community. And we've already done all the research, right? These builders build all across the country, and we get to cherry pick the best inventory in the best markets and then offer wholesale type of pricing to the individual investor. So you don't have to be part of a big institution, right? And we are the first company to be able to do this. We are the first company to take the institutional type of discounts and deals and pass those on to the individual investor. And we're very excited about that. These homes are already completed. Some of them are already leased. Some of them are not leased. These are single family and some small multifamily in multiple different markets. So that's the business model that we operate. Now, how this works is that, you know, we're negotiating these wholesale type of pricing from these builders. That can vary anywhere from generally 5 to 10% below market value pricing. That means on a $300,000 house, if there is a 10% discount on that house, that's $30,000. You could buy that house, and this is where the math is going to, like, if I would encourage you to write this and go through this with me so it makes sense and you have notes on this. On a $300,000 house, if we had a 10% discount on that, and again, it varies 5 to 10%, that means you have $30,000 that is immediately reduced. That builder would sell that retail for $300,000 and is today, that house will appraise at $300,000, but you're able to buy it for $270,000, right? You get an immediate discount just by being a part of our community. Now, here's where it gets creative and gets better. And I'm going to cover a few of these other slides, but Naresh, stay on this one, I think. And then I'm sure that we'll have a ton of questions. So you have 10% on this $300,000 new construction house in an A-class area somewhere in the Southeast, because there's multiple inventory options and we just look at them with you, right? We have some that are significantly less than this and some that are more expensive. That $30,000, that 10%, you don't have to take as a price reduction. And we're the only people that have access to this exclusive inventory and offering this opportunity to you guys. This is really important stuff. That 10%, you choose, you as the investor get to choose how you want to use that. You can take that price reduction and have immediate equity. Guess what? That will help you burr the property. If you want to burr new construction, you can sell it and actually even probably make some money, because if agent commissions are 5% and you have 10% equity, you possibly could flip that and sell it on the retail market, although most people are looking to cash flow it and hold it. Or you could take that 10% and use it to buy the rate down. So you can buy the rate down into the 3s right now to cash flow the heck out of that on a 30-year fixed loan. Or you could take that 10% and put it back in your pocket, right? If you're putting 20% down on a new construction asset at $300,000, and that $60,000 is a 20% down payment using conventional financing, you can choose, if you want to get $30,000 back. Calculate what that does to your ROI. It skyrockets. All these are still cash flow deals. You have equity because you're putting 20% down, but we're giving you 10% back, right? That will cover half of your down payment. But you can do a combination of these things as well. You are the investor. It's your property. You get to choose how you want to use that 10%, but it's extremely beneficial. And not all properties are 10%. It varies on the market, anywhere from 5 to 10%. Some of the deals that we have that are 5% cash flow better and actually do better than the 10%. But this is where the 0% comes in, okay? And go through some questions, guys, if you have questions on this, because I'm happy to dive deeper into this. So we have 5 new construction inventory all across the country that you can get 5 to 10% discounts on, that you get to use. You don't have to use it as a discount. You can get cash back, buy the rate down, however you want to use it. Your money. And that's because we've negotiated with these national builders because of the volume and the relationship we've built. We also have unique financing options that are available that we've also negotiated with different banks and credit unions. So you can use whatever lender you want to. Traditionally you need 20% down with a conventional lender to buy, but we also have local credit unions that will offer 5% down investor loans. And I know I'll get a ton of questions about this. I'm happy to go through this loan option. You still have to qualify for this loan. It's a portfolio loan, meaning these credit unions hold these loans in-house. They don't sell them. There's not Fannie Mae, Freddie Mac loans. You still have to qualify. You need to be, financeable and have good credit. But if you qualify, they will finance you up to 5 investment properties with only 5% down. There's no PMI, private mortgage insurance. There's no prepayment penalty. Remember, on a conventional loan, if you put less than 20% down, even for a primary residence, you have to pay mortgage insurance, PMI, right? We have lenders that will do 5% down on up to 5 investment properties. They don't lend in all states, but they lend in most of them. Now, here's how the 0% down works. And you don't have to do this, right? You can buy properties with 20% down if that makes sense for you. We're here to help guide you through the right option. But if you're getting 5 to 10% back on a new construction property and you're using a portfolio loan from a local credit union, these are 30-year loans. They do have a 10-year term. And the interest rate's going to be higher than if you're putting 20% down. Just acknowledge that, there's probably 7 to 9% is the interest rate, depending, because it's a bigger risk to the lender, right? As they have a higher loan to values, they're lending more money. It's more risk to them. So naturally, they have a higher interest rate. But if we're giving you 5 to 10% back on a new construction A-class property, and you're buying it with 5% down, then that 5% back to you, cash in the pocket, can cover your down payment, can cover your closing costs, and in some cases, even pay you to own a new construction property with 0 money down. So it's matching this unique 5% down loan option with a property that we're giving you 5 to 10% back on. And essentially, you're into the property for possibly no money down. and you're getting, in some cases, actually, paid to buy that property. Here's a caveat. Naresh mentioned this previously. If you have a 95% loan on a property, it not only does it have a higher interest rate, but it also has the loan payments just higher, right? Because you have a 95% loan instead of an 80% loan. So what that means is your loan payment's higher. You may not be positive cash flow on these deals. And you just need to evaluate that. This is where it ties into the tax side. And I can go off into a tangent here as well. I'll turn over to Naresh first, but we have a lot of people right now that we're working with. They just want to maximize tax benefits. They want to do the accelerated depreciation. They want to do the cost seg, where you can save up to 30% of the purchase price offset against your W-2 income. I will talk about that, but let me just cover the rest of this. And so, the property may not be positive cash flow if you have a 95% loan. Now, you don't have to put 5% down. You can put 7% down, 8% down to be able to have better cash flow. Or maybe you look at a Midwestern property that has a little bit better rent to price ratio and a little bit better cash flow, where you can still buy property with little to no money down, and you might have a positive cash flow or break even property here. But this can be carved out however you want it to be. It's a unique loan option matched with builder incentives that really provide a really unique opportunity for you to make big moves in your real estate portfolio. I think the one last thing I'll say, Naresh, is that understanding if you're going to buy this strategy or use this where you're, buying new construction, because you can buy up to 5 investment properties with this portfolio loan. So in theory, if you choose the right inventory, you could buy 5 new construction properties where you have no money really into the deals at the end of the day. That causes a huge tax benefit. But you need to think about the exit strategy. Most of our investors are holding properties 4 to 6 years because the properties appreciate, the tenant's paying the loan down, just as Naresh talks about Keith's 5 ways you get paid. You're building equity over time. So maybe it makes sense if you do have a negatively cash flowing property within 3 to 4 years, cash out, refinance that property because you have equity in it, or just do a refinance and lower the interest rate, or put a conventional loan in place that has a significantly lower interest rate.
All right, welcome back. Like I said, lots of moving pieces, kind of complicated, but you might want to go back, watch that a couple other times, right? Because, they got a lot of balls moving to get this stuff put together, right? So from here, y'all, if you like what you see, you like what you're hearing, you want to dive deeper into this, you want to possibly buy this particular motto in the Montevallo area or other areas in and around Birmingham, or possibly work with Rent to Retirement in some of their other communities in other states. Again, they're big in the Southeast. Just go ahead and reach out to them directly. That's where you'll be able to put your offers in, or get a little bit more background, get a little bit more detail, get yourself pre-qualified, see if you can qualify for this financing, and see if you can get yourself one of these houses. Their info should be on the screen. If Tyler doesn't have it on the screen right now, we definitely have it in the show notes below. Plus, you could also go to Rent to Retirement's website or their other platforms. Like they have all. They're big on all the social medias too, like the Twitter, TikTok, YouTube, whatever. They're everywhere as well. And you could learn a little bit more. Zach specifically and some other members of his staff, they're putting out a ton of content. And it's all geared around the education, right? And explaining to you guys how these deals are put together. Because legitimately, when you're doing a creative finance deal like this, it's not going to be exactly how a different guru who's just trying to lure you into some click funnel would explain it, right? The actual logistics of these deals are rather complicated, and there's a lot of money at play when you're getting institutional type discounts, as he was discussing, right? So you'll probably want to really digest a lot more of that info, and you'll be able to reach out to their team and ask a ton of questions directly, right? So reach out to them at renttoretirement.com or any of their socials. Again, info should be on the screen. If not, it's in the notes below this video.
Thanks for watching. Subscribe to HoltonWiseTV for more financial information, education, and entertainment.